let's get technical now. We're joined by Howard Friend, Chief Technical Analyst at MIG Investments. Howard, let's take a look at exactly what we are seeing in these markets. Let's put up the first chart, the S&P, the one that everybody's watching very carefully at the moment. Have you of the view that that we could see this thing halving, or was yesterday's sell-off just a blip?
I believe that yesterday's sell-off is really just part of a corrective pullback. We had over the previous 4 or 5 weeks, the S&P rallied by 17-odd%. The move blew through some pretty big resistance levels, and a healthy pullback was due, and we're kind of seeing that now. The pullback, as far as I'm concerned, could go down to sort of the low 960s, perhaps to retest the old break points. But resistance technically tends to turn to support after a break, and I would look for a bullish reversal in that region.
So that leads me on very nicely to what's happened with dollar yen. Indeed.
Dollar yen, excuse me, dollar yen reversed quite sharply last week after last week's or the previous week's bullish payroll-inspired rally. So we've got a bearish 2-week reversal pattern, which suggests we could perhaps head a little bit lower within the range, which tends to sort of oscillate around the 95 level, perhaps in line with the stock market correction. So pressure would be on the swing low at 91.74, but I don't believe when we get down to there, if we get down to there, we shouldn't stay there for very long, because the larger decline from the April high, 101.44, is certainly not an impulsive-looking pattern. It's a very begrudging, laboured decline. And so, in line with a stock market base in the 960 region, I would look for dollar yen to be basing in the low 90s. That's for sure.
How big a risk is there to this sort of positive scenario that you're painting for equity markets and by extension into everything else? How certain are you that this is going to happen? Obviously, charts aren't about certainty, but is this a clear pattern in your mind?
It is. Looking at the S&P, you have the line which connects the Jan and June highs. Many people are looking at the line as a neckline of an inverted head and shoulders basing pattern. And so typically when the market retests the breakout points, that you should get a thrust in the direction of the breakout, which in this case is up. So in that respect, the stock market looks to be limited on the downside.
Okay, let's wrap it up. Euro dollar.
And euro dollar, we failed above the 143.38 June high a couple of weeks back. Again, in line with the equity market top. I think perhaps in the short term we could ease back to 140, maybe 139. But we've had a 5-wave bullish up sequence from 124.57, and I believe that the pullback is corrective, and we will break above the recent high above 144.
Excellent. Howard, good to get your take. Thanks very much indeed for joining us. Howard Friend joining us from MIG Investments.